Well, thank you everyone for joining us this evening. We really are excited to have our discussion tonight. All of us here at BCAP Wealth and Vita Financial would like to thank you for joining us. We're excited to host this panel discussion and talk about key takeaways from 2024 and what we can look forward to in 2025. So we have our lovely panel of experts. We have Arthur Bush, who's the Chief Executive Officer of Vita Financial. We have Stephen Bush, who's the Chief Business Officer of Vita Financial. Nicholas Benzer, CEO of BCAP Wealth. We have Andrew White or Drew White, Director of Client Experience and with Vita Financial. Kate Sussman, Financial Professional and Client Experience Specialist, also with Vita Financial. We'll be covering a few topics tonight. And as an open panel, we plan to discuss some of these topics that have been top of mind for all of us. Everything from impacts on the election to strategies to protect our personal finances. Let me first take a minute to say that we do not take any political position, nor do we endorse any political party. We are focused on policy over politics. Our guidance is strictly based on economic principles and market analysis, and also financial best practices. If you have any questions during our time together, please type them in the chat, and we'll do our best to get to all of them. We have about an hour and 15 minutes to cover as many topics as we can. So let's go ahead and jump right in. So I would say 2024 was a bit of a movie. I found myself at the edge of my seat almost every day waiting for the plot to drop. Panelists, I'm interested to hear your thoughts on some of the major trends and economic events that helped define 2024. Who'd like to start us off?
Yeah, I'll take this first one. You're correct. 2024 was was a wild one. Really, I think since COVID, since 2020, we've seen quite a bit of impact, quite a bit of volatility. Things are happening very, very, very quickly. For a couple major trends, I'm going to classify them in 5 different areas. The first with inflation, the next global energy and market volatility, the next technological advancement, AI growth and regulatory efforts. Number 4, geopolitical instability. And then number 5, shifts in global trade and supply chain realignment. For the first one with inflation I know is something that's been a hot topic. If you read news or if you watch the news, I know you've seen this for the past couple of years. Inflation's been hot, with that being a key theme, especially throughout 2024. Central banks around the world, particularly the Federal Reserve, continued their policy of higher interest rates through the earlier months of the year, trying to cool inflation after years of soaring prices. While inflation generally showed signs of moderation, there was persistent pressures in certain sectors like energy and housing that keep central banks vigilant. For the second area of global energy and market volatility, energy prices experienced continued volatility in 2024. I know that similar thing with the news sources, the news channels, and the topic of discussion there. The Russian-Ukraine conflict was really a pretty big area that caused the disruptions of those supply chains. This instability led to fluctuations in oil and gas prices, which had direct impacts on inflation and the cost of living in many of the regions. At the same time, there was increased investment in renewables, with governments pushing forward on green energy initiatives to meet carbon reduction goals. Number 3, technological advancements, AI growth, and regulatory efforts. If inflation was a hot topic in 2024, then technological advancements, AI growth, and regulatory efforts was an even hotter topic. Automation took major steps forward in 2024. AI technologies continue to disrupt various industries, from healthcare and finance to transportation, manufacturing. Companies double down on investments in AI-driven tools, improving productivity, but also raising concerns about workforce displacement. Governments began introducing regulations around AI to address ethical concerns, privacy risks, job displacements, setting the stage for ongoing debates about the balance between innovation and the societal impact, which is something that truthfully we'll see some waves on that for decades. It's something we're constantly going to be making adjustments on. Geopolitical instability. I mean, there's some fairly obvious ones with the Russian-Ukraine war and tensions between China and the U.S. I'd also consider the election this year being a pretty big one around the geopolitical instability. That continued to define our global markets. The Russian-Ukraine war, had ripple effects on the global economy, including the energy crisis and supply chain disruptions. sanctions on Russia, and the global response to the war affected various industries, especially energy, defense, and agriculture. And then for the fifth, shifts in global trade and supply chain realignment. Following the disruptions of the COVID-19 pandemic and the continued geopolitical uncertainties, supply chains saw further shifts in 2024. Strategies were accelerated as companies looked to mitigate risk posed by distant suppliers and geopolitical tensions. And I think this will be a pretty critical area when it comes to the AI, machine learning, technological advancements, concerns in future years. So that's
Wow. Yeah, I'm taking notes actually as you're speaking. So, author, what do you see as the most important market developments?
um, yeah, I'll do the same thing. I'll break it down into the theming, the 5 themes, and they'll align with those areas for 2024 as well. Equity market volatility and shifting investor sentiment for the first, bond markets and yield curve inversion for the second, emerging market performance for number 3, cryptocurrency and digital asset regulation, which is I know that one that Stephen is chomping at the bit to discuss, and then the fifth, sustainability and ESG investing. With the first, equity market volatility and shifting investor sentiment, 2024 was characterized by market volatility in global equities, experienced significant swings as investors adjusted to shifting interest rates, ongoing inflationary concerns, and geopolitical risks. However, despite the volatility, there were strong rallies in some sectors, particularly technology and AI-related stock positions. For the second, with our bond markets and yield curve inversion, the bond market was one of the most important developments in 2024. Investors closely watched the yield curve inversion. Long-term yields were lower than short-term rates, signaling investor concern over long-term economic growth and recession risks. For the third, emerging market performance, emerging markets had mixed results in 2024, a little bit of mixed bag. While some nations benefited from rising demand for raw materials and energy resources, others struggled with the impact of higher global interest rates and then topping with inflation. Number 4, for cryptocurrency and digital asset regulation, our cryptocurrency markets faced heightened scrutiny in 2024. The push for more comprehensive regulation of digital assets, including stable coins, central bank digital currencies, and decentralized finance, gained momentum. Governments around the world sought to address concerns over volatility, security, and illicit activities, leading to both challenges and opportunities for the crypto sector. I think too, with the inauguration right at the beginning of the year, this administration showed a little bit of an alignment of their stance around cryptocurrency and digital asset regulation with the introduction of the Melania coin just a couple of days before, which honestly is the first time we've seen a real administrative stance on it. Next, with sustainability and ESG investing, for the fifth, environmental, social, and governance investing remained a major theme in 2024. While growing emphasis on climate change and corporate responsibility, more funds and investors turned their attention to sustainable investing. However, ESG faced scrutiny in some markets as debates over the authenticity of ESG ratings and the financial returns of these investments persisted. So if I were to summarize all 5 of those sectors or those specific areas, just to align with the first question as well, Corey.
Amazing. So describing it as a movie was a bit of an understatement. So as we look forward to 2025, let's look at setting the stage for 2025. Would anybody like to speak to that?
Yeah, I'd love to, Corey. 2025 is going to be interesting to say the least for all the reasons that Arthur just mentioned and even more. We firmly have a stance throughout the entire Vita Investment Committee and BCAP Wealth, as well as Vita Financial, of policy over politics. In the day and age that we're in, we anticipate this to be volatile in the beginning half of 2025 as the new administration takes their stance, right, and implements their agenda. But truly, we are agnostic to political views. We care really how it affects the markets, which in turn affect our portfolios. And of course, at the end of the day, our clients' financial futures. the returning administration has some key focuses, which we'll touch on at a high level. Obviously, international trade and how is it going to affect global markets. We're very interested to continue to monitor those technological disruptors throughout 2025. And the energy demand, AI, and the energy demand that AI creates, decentralized finance, and really how that reverberates through other sectors as well. But like I said, we fully anticipate a little bit of volatility, and that's what we've been seeing in this first quarter of the year. Markets were a little volatile today as well, and we expect that now. We don't think anything major, but our base case is as the markets start to understand what these policy implementations will reverberate through the rest of the markets, we'll really get a clear understanding and anticipate the second half of 2025 to be very strong. The reason why is, unemployment's still historically low. We're seeing earnings growth, not only from those Magnificent Seven companies, but really the rest of the 493 in the S&P 500, which is really encouraging. The P&E values that we monitor look attractive on those 493, so that gives us a lot of hope. And so we're excited for what 2025 has to bring.
Awesome. You spoke a little bit about the perspective of Vita and Benzer Capital Wealth. Can you let us know what changes we could expect from both Vita Financial and Benzer Capital Wealth?
Yeah, absolutely. So last year, both Benzer Capital Wealth and Vita Financial, had some growing through the first year. We learned a lot in the first year of moving over to the independent side, and I think everybody that's a part of not only the investment committee, but both respective companies would agree. But it also allowed us to recognize tremendous opportunities that we have and a unique niche in the market that we can, for lack of better words, exploit for our clients. And so that's led to a lot of really good changes within both companies. Within the Vita Investment Committee, we're rolling out new models in collaboration with the Vita Private Wealth Group, which Drew will touch on in just a moment, as well as the Benzer Capital Wealth Private Wealth Group that will be growing in the coming months. We'll have different types of models. We'll have things that are very focused on specific themes that our clients have continued to ask us about and that we see as opportunities that are in sectors primed for growth. But we'll have some unique portfolios as well versus a lot of other portfolio managers because we, again, recognize an opportunity as we move to the independence world. And we noticed that we could allow all of our clients, not just our high net worth clients and accredited investors, to have the opportunity to invest into alternative investments. Things like private equity, private credit, and real estate specific funds that typically were reserved for those higher net worth individuals. Now we're bringing it to each and every one of our clients. So we're very excited about that. At BCAP Wealth specifically, we're bringing on investment analysts and portfolio analysts to assist with the data-driven approach that we take. And like I said, we're policy over politics. We're constantly monitoring market indicators 24/7. And it's the stance of all of us on the Vita Investment Committee and really at the collective that the more data that we can process and the more information that we can look at and monitor, the better off our portfolios are going to perform and the better our clients' financial futures will ultimately be.
Awesome. And I know you mentioned Drew. Do you want to speak from Vita's perspective?
Sure. I'll echo what Nick had to say. We had an interesting transition to independence last year. I think one of the most intriguing things was the opportunity to acquire new knowledge and then apply that knowledge in terms of goal setting. What we learned in 2024 is that we needed to dedicate more resources to building out our wealth management offerings and analytical resources for our clients. So as a result, we've established the Private Wealth Group within the core office for 2025. Goal of the Private Wealth Group is to expand our managed money offerings, be able to provide analysis to our clients, and then act as a resource to our investment committee, which Nick spoke to, as we navigate the complexities of the market at large. Currently employ 4 analysts with backgrounds in quantitative analysis and financial technology. Truly an exceptional group of people, and we've been extremely impressed with their efficiency and what they've been able to accomplish to this point. We anticipate adding both a collection of 10 to 12 thematic portfolios, as well as a basket of stocks and ETFs as candidates for inclusion in those portfolios in 2025. Additionally, those thematic portfolios will serve as the seeds for construction of our asset allocation portfolios. All the securities and debt held within our portfolios will be thoroughly researched by the Private Wealth Group. So as you can see, there's actually a lot happening this year with respect to expanding our service offering at Vita.
Indeed. Indeed. Well, like I said, I'm definitely taking notes over here, and our other panelists, don't be shy. We have some big shoes to fill. But let's go into our next topic, which will be election impacts and policy outlook. So, how will the incoming administration trade, regulation, and tax policies rather, shape our future? Sorry, Nick, I can see you're speaking, but you're on mute.
Oh, the hated mute button. It gets us all.
It gets us all.
Yeah. But as you mentioned, Corey, 2024 was interesting to say the least. We saw, and it seems like we say this every 4 years, one of the most contentious elections in recent memory. And so with that comes a lot of new ideas. And we saw a sweep of one particular party, which really, like I said, from policy over politics, opened our eyes that there's going to be a lot of changes that come really quickly. They've got that control of both Congress, Senate, and the House, Senate, and the executive branch. And so they're looking to implement their agenda very quickly. There's a couple of different areas, and I'll kind of take a page out of Arthur's book that we really break down in 4 or 5 specific areas. The primary focus that we've all seen through the, I would say, returning administration, not new administration, is that they are really coming in and primarily focused on, government efficiency, trade policy, and immigration. That really has been their mandate that they have taken the first 100 days and ran with. Trade and immigration policy has, unless you've been living under a rock, been at the forefront of everybody's television, mobile device, you name it. And it's been very interesting. We've seen immediately some tariffs that have been implemented to specific countries, Mexico, Canada, as well as China. And I think what's very interesting is how quickly those respective countries have come back and come to the negotiating table with the administration. Tariffs will be interesting. Historically, that has been looked at as a negative in terms of growth and for the consumer. But we see that if the dollar continues to strengthen the way it has, it will be limiting the effect on the consumer, which would be positive for all parties involved. And trade balance, I think, is going to be interesting as kind of in the same vein as government efficiency. They're looking to really narrow that national debt that we continue to accrue each and every year. A good preface is government efficiency and the DOGE, Department of Government Efficiency, that it seems like we hear about every hour of every day now, but they're hyper focused on making the government more efficient. And what's awesome about our Vita Investment Committee and the multitude of individuals that we have and experience is that we get to have fun conversations with great people all the time. And I fortunately had the pleasure of actually speaking with somebody on the Department of Government Efficiency, and he made it very clear that their prerogative is to cut down excess spending in all departments of government, and that they know they're going to ruffle some feathers, and that's okay. In the end goal being a government that runs more efficiently and effectively for the entirety. So that was very interesting to hear a firsthand account from them. Regulation, or better said deregulation has been talked about from the Republican Party really since they started campaigning for this election years ago. And we've seen its effects already through markets. They really have been focused on deregulation, primarily in financial markets. It's no secret that big banks have performed well since November, and that is really predicated on the stance that they are looking to deregulate and lower the capital reserve requirements for those individual banks, which allows them to take that money and go and do what they tend to do best, which is loan it out. And so the account that we're monitoring on all balance sheets of large major banks is that net interest income, and they continue to grow, and we anticipate that to continue for the rest of 2025 and beyond. So we like that sector. In terms of technology, and I know Stephen's going to talk a lot about this, of kind of the sectors specifically that we like, but the tech disruptors and the tech sector, the returning administration has made it very clear that they want the United States to be leaders in that space. I mean, if you want to know how much, just take a look at the inauguration and who is sitting right behind Trump's family. CEOs and leaders of the largest companies in the United States that are really pushing the tech sector. So that was really interesting. And again, we noticed that. And so Arthur mentioned the Melania coin, and we're looking at the rest of the crypto space as well, that they've been performing well since November. There's a couple of big cases that have been monitored that were really put to the wayside in the previous administration that will be brought back to the forefront once the returning administration gets through that government efficiency, trade policy, and immigration. And kind of leading in that same space, M&A markets. The last 2 years have been really, really interesting in terms of M&A markets, which is, again, why we are excited to implement those alternative investments to all of our clients within our portfolios. But, an interesting statistic is that back in 2021, the IPO market was booming. We saw in 2021, there was about over 1,000 IPOs. In 2020, there was about 500, 480 to be exact. And last year, there was 225, and the year before that was 154. So it's slowed down significantly. I'm sure a lot of people have been hearing about the steel M&As that have been talked about for quite extensively with U.S. Steel and Nippon Steel. So that will be interesting to see where that ends up being. And we're continuing to monitor that. Last thing is, of course, tax policy. 2025 is supposed to be when the tax cliff of the TCJA that the Trump administration put in place during their first term is supposed to expire. So that's something that we anticipate in Q2 to be coming to the forefront. They'll be focusing on things like, are they going to extend those taxes for another 2 years, or are they going to make them permanent? So we're going to hear a lot of conversations about that from Capitol Hill. Our base case is that they're going to extend them for 2 years, and then we'll be back to the drawing board. But, I think income taxes have been brought down from previous levels. Capital gains and dividend taxes is something that's been discussed for high net worth individuals, which are classified in the eyes of the government as household incomes over $450,000. They're possibly having a higher capital gains rate or dividend tax as well. So that'll be interesting to see what happens there. And then SALT taxes, which are going to be interesting to see if those get extended or they get repealed. If they do get repealed, we'd see a decrease in collections as a result. So it'd be interesting to see. And so in totality, those are the 5 spaces that we really see the election being most directly affected.
Awesome. So, as these new regulations take shape, it seems like efficiency is key. So what potential market industry impacts should we expect?
Yeah, I could. I'd like to talk on this actually. So it seems like the safe take lately is to wait and see. I think it's also safe to say that many of us are a bit too anxious to want to do that. We've had a lot of conversations with institutional partners as the year has started up, just trying to get a feel for what everybody is really seeing in their respective lanes. And most of the thoughts out there are there's a lot of noise Don't react to the noise. Be proactive. Make sure that you're planning ahead, just like all the things that we preach to clients in the planning process. And so, from a potential market and industry impacts, a lot of the information we're getting out there is, just we don't have a crystal ball, so hang in there. It's not really good enough for us. That's why we have the private wealth group, the investment committee, and the resources that we put towards trying to get a feel for what's happening. So it's important to focus on kind of what is being said, what's being done. The returning administration's focus on deregulation, reshoring, economic restructuring is expected to create, economic growth and risks, really depending or not really depending on who you ask. That's kind of just the answer you're going to get from everybody. There's pros and cons. There's a lot of strong opinions, but we also would commit to the idea that there are a lot of strong opportunities. It takes intentional analysis of more than just the headlines, the data-rich environment out there. Everybody, I think I probably say this every time we get on one of these workshops, but you have Robinhood, you have Personal Capital, you have all these tools that are right in the palm of your hand. And that type of stuff empowers the retail investor like never before. But we also have to be really intentional about the data sources that we're getting our information from and our news from, because that's starting to integrate its way into financial advice, financial planning. As Corey was mentioning at the beginning, and I know it was echoed later, we are about policy, not politics. We're agnostic on platform. It's really about the cause and effect. And so let's talk about that. There is a growing consensus that bureaucratic inefficiencies, overspending, and outdated regulations need reform. Bar none. Doesn't matter who you ask. There are absolutely questions about where money's been going. It's been going on for decades. So as far as getting spending under control, I think the Department of Government Efficiency is taking a very radical approach, but we've also seen this before. In many ways, today's environment kind of resembles like pre-1978 civil service reform era. So we had a really bloated federal government, inefficient system, needed restructuring. Reaganomics came after. There's a lot of positive thoughts on that. There's also a lot of negative thoughts on that. So again, it's just one of those things that it all kind of depends on which chair you sit in whenever these changes are happening. So let's talk about how to try to be in the right chair. There are our top three winners that we're really trying to focus on or watch, this year, just based on all of the things going on, is first energy. Deregulation is absolutely expected to boost domestic oil, gas, LNG, nuclear energy production, easing restrictions, federal land drilling, reactor permits. These are all things that benefit producers, infrastructure developers, and industrial manufacturers that rely on domestic energy. And so that's been a really big talking point as of late, is the expected impact that the returning administration will have on energy. The other piece that Nick did touch on is technology and automation. It's AI, robotics, semiconductors, machine learning, all of the chips type stuff that you've been hearing about. It's kind of all wrapped up in that. Like with looser oversight, AI automation is going to be able to expand into industries like finance, logistics, healthcare, these different kind of fields that everybody's been talking about the technology, but as far as applying it, you haven't really seen that shake out. So reshoring initiatives and tariffs on imports could boost domestic production of semiconductors and some of the other materials that support technology and automation. And the CHIPS Act, and the kind of drive towards supply chain automation is just a clear indicator that it's a safe bet. That's probably where money is going to be flowing. As a matter of fact, what was it, Nick? It was a $500 billion infrastructure investment, or right? Am I wrong?
That's right.
About that AI? I just wanted to say it's a B, right? It's not an M, it's a B. Okay, so
it's
because
a B.
well, but B. So let's also talk about how Microsoft and OpenAI actually came up with Project Stargate about a year ago, and they committed $100 million to it to build a nuclear facility to support Microsoft. And you're literally seeing a public-private partnership on the inauguration stage take precedent and them say, we are standing behind private sector business in these fields. So I think it's a given. It's worth paying close attention to. The third winning area. I said energy, technology. The third one is manufacturing and infrastructure. We expect major overhauls on energy grids. We expect major overhauls like we were talking about in logistics. If there's some of these other technological advancements happen. And so I think that it's important to pay attention. Nick mentioned tariffs on foreign goods, incentives for domestic production is going to boost, but it all kind of depends on how the U.S. dollar maintains, stance in the global market. So I do think that it's important to not get overzealous and overexcited about the reshoring initiatives because there's a lot of factors at play on whether or not different areas maintain relevancy. So let's talk about that. The last thing is just there are kind of 3 areas that I would look towards for losers, and I do think that's a really strong word to be clear. I don't like to deem things losers because what I call a loser today is probably going to take off in like 6 months, and it'll be a winner then, and then that is just how the market goes. So what we know for a fact, though, is that cuts to subsidies, tax credits for renewable energy and clean tech. I guess no question the returning administration is not as supportive of green energy, clean energy as previous administration. So just like I talked about with energy, fossil fuels, and nuclear. So that's an area where we expect there to be, some market cap reduction, companies that are in that area. The second piece is anything tied really to government contracts, anything tied to government spending. While the Department of Government Efficiency is making a lot of changes, bureaucracy takes a while to make its way through the system in all ways. And so the economic ripples that may come from, cutting grants, things like US aid, how that may impact local economies and farmers and all that. I mean, we're in Georgia, so that's a huge impact to farmers here and some, particular crops. So government contractors, that's an area that we expect to suffer a little bit. And then the last area that we are really not excited about, maybe the right way to put it, is retail and consumer goods. I think that while we talk about how the market is expected to do, it's really important to acknowledge that the market is quite disconnected from the economy these days. And when it comes to retail and consumer goods, everybody here has purchased tons of things on Amazon, and within arm's reach, I probably have 15 things within arm's reach that say made somewhere else on the bottom of it. And so what that means is if we're going to slap tariffs on everyone, expect the prices of the things that you buy to go up. So yeah, that's a lot, but that's the markets, the capital markets, the impact to the sectors. That's a lot of that is regurgitated from the private wealth group guys and Drew's team, but I took a lot of credit there in that explanation.
No, yeah, excellent. Very well said. I guess my follow-up question to that would be, how does that affect our personal finances?
I'll take that one. So let's talk about the 3 key areas to watch: inflation, interest rates, and the job market. So first, rising inflation. This means that the cost of goods and services is going up, which can reduce your purchasing power. To navigate this, it's wise to keep a close eye on your budget and consider investing in assets that tend to appreciate over time, such as real estate or stocks. Next, we have interest rates. Higher interest rates can increase the cost of borrowing for things like mortgages, loans, and credit cards. It might be a good idea to pay down high interest debt quickly and look into refinancing to a fixed rate loan. On the brighter side, higher interest rates can also mean better returns on saving accounts and fixed income investments. Lastly, the job market. While unemployment rates have been stable, there are some concerns about potential job losses in certain sectors. It's important to have an emergency fund that covers 3 to 6 months of living expenses. You want to stay updated on market trends and keep enhancing your skills to stay competitive. I guess in summary, being informed and adaptable is crucial. Budget carefully, manage your debt, and plan for the future. You want to make sure you're cushioning the impact of these economic trends on your personal finances.
Yeah, thanks, Kate. I would call that the 3 musketeers of financial stress.
Yeah.
Inflation,
Yep.
unemployment, and interest rates. They get you. So how do you see the impact on our investments and the strategies that we use in our models. And anyone can take that.
I'll go ahead and start. I mentioned earlier with regard to the strategies and models at Vita that we were adding the private wealth group as an asset this year. One of the bigger roles of that team is going to be to inform us as to the headwinds and tailwinds of the market, as external factors affect it throughout. Spoke earlier of baskets and thematic portfolios. Those exist as alternate securities and ETFs, debt instruments that we think present good opportunities, but maybe didn't make it into either a thematic portfolio or an asset allocation portfolio. As market conditions and external factors change, as they always do, we can pull from that basket of fully researched materials to find alternatives should that need arise. So we feel like that positions us to act quickly if we need to.
Anyone else have any?
Yeah, I'll chime
Awesome.
in as well from the BCAP side. One of the things we pride ourselves on, not only at BCAP but at Vita as well, is truly taking a data-driven approach. And I think that's what allows us to be less emotional. We are constantly reviewing indicators in the market. You touched on, a couple in the Three Musketeers. It made me want a chocolate bar, so I might go get one after this. But, inflation, interest rates, we hear about them at nauseum. Every time the Fed gets a chance to speak in front of a microphone, they take it. And we see a lot of movement around those. But, PCE, I think some of the things that Stephen touched on that a lot of people tend to forget is that, 70% of the United States economy is built on consumer spending. And so we're monitoring the consumer spending. We're monitoring consumer sentiment. We're taking a look at those things constantly. And see how is that going to affect portfolios. And Stephen mentioned it, the retail side could see a little bit of struggle in the next few months, but that doesn't mean that it will always stay there. And so that's the fun thing about our conversations that we have regularly as a Vita Investment Committee is taking the information and the data that we receive from the private wealth group and that we're all monitoring on our own accord and making sure that we're doing our fiduciary duty to our clients to make sure we put them in the best possible position. So like I mentioned, the first half of the year it's going to be a lot of headlines. It's going to be a lot of stuff that really kind of shakes your feathers and makes you feel like you should make an emotional move. But we always go back to what is the plan for our clients, right? Do you need this money tomorrow or do you need this money in 10 years? And that, of course, is how we help them navigate.
Yeah, thank you so much. Yeah, it's so important to take a holistic approach when considering everything. And Kate, I love how you made it relevant to our own personal finances. So let's go on to the next topic of emerging technologies and innovations. So, I mean, when I think of technology, it's going so quickly. Like I wouldn't be surprised if my Roomba, which is buzzing around my feet right now, were giving me design advice. So what technology should we be watching?
Yeah, watch your Roomba closely would be a quick response. So I'm gonna try to avoid sounding like a YouTube influencer because I'm about to use quite a few buzzwords. But bear with me. There are a ton of technologies to watch as of right now. There seems to be an incredible amount of convergence and innovation and ideation and collaboration. The push for open source, like it's brought together resources, ideas, people. The VC space, PE space has been exploding for the last, 10, 15 years. And that really has a lot to do with connecting the right ideas and projects with funding, things like that. So as far as identifying the key technologies to really pay attention to, I did break it out into 5, kind of key areas. I already touched on artificial intelligence. I do want to give just a little bit of a secret, sauce there, though. Everybody talking about it right now. is saying AI, 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 because it's all over their feed and it's what you've seen in the news. But what I would encourage everybody to do some research on is machine learning, because that is the underlying technology. It's really been there for quite a while as well. And again, what you're seeing now is the commercialization, monetization, and deployment of technologies that have really been in development for quite some time. So artificial intelligence, we see that obviously being a hot ticket item like we talked about. The second piece that plays a major role in our space and where we head is blockchain and decentralized finance. Beyond, cryptocurrency, blockchain, the technology, the ledger, the validation network, if you will, for transactions, has the power to reshape supply chain management, real estate transactions, financial transactions. There are a lot of applications of that have been marketed, would be the way I'd put it today. And I say that because for as long as the New York Stock Exchange does not acknowledge cryptocurrency as a legitimate asset and security, then there will continue to be a bifurcation between centralized finance, decentralized finance, fiat currency, all of the different little buzzwords that you've heard. As far as who's going to win, I don't really have a great answer there as far as whether or not, crypto and then all of the big banks are going to capitulate. I don't really see that world. I think where we actually head is more broad legislation and regulation around assets and investments in general to bring cryptocurrency into the normal kind of the regulated securities market. And so finance, the digital finance is just a huge area where you're seeing that be adopted through many things. The third area would be quantum science and computing. It seems like every day there are new articles and things coming out in science that show significant improvements in our ability to process data. Quantum computing has the ability to do things that are beyond my ability to even talk about, but I can say a couple of things that I know that it will do. So quantum computing basically is the ability to run, I'm going to say really simplistic, but run calculations significantly faster than normal computing. It's like a very easy way to say how this is going to affect things. Now, I want to highlight when you log into things these days, most of everybody on this call will have a username and password, and you'll log into the website you're trying to log into. Well, cryptography, so how we are securing information and data, quantum computing has the ability to tear through coming up with permutations for passwords. So classical encryption, the way that we are all familiar with using technology, logging into technology, and validation, all of that, could be changed drastically by advancements in quantum computing. The fourth area would be biotechnology and genomics. There are massive innovations in CRISPR, personalized medicine, synthetic biology like lab-grown meat. It's another area that machine learning, artificial intelligence has really been applied pretty heavily to biotech healthcare. So you're seeing a lot of advancement there. And then the fifth area that I think is actually really necessary for the other things that I just talked about to happen and continue to grow is we have to make some advancements in energy. We have to come up with some very efficient, effective ways to handle massive amounts of energy, because if we're going to invest $500 billion into AI infrastructure, we have to be able to support the electricity bill that it is going to cost to do that. And so small modular nuclear reactors, fusion energy, alternative exploratory fuels, there's been tons of attempted advancements in energy technologies. But I think that next generation breakthrough, if we can push through this bottleneck that we currently face around transmission, I think you'll see advancements in quantum computing, digital finance, AI, and biotech, and all those other areas, that we haven't seen before.
Awesome. And I think you spoke on it a little bit, but could you recap for us what some challenges and opportunities that could be presented by these new innovations?
Oh yeah, no, I didn't. I actually didn't give you any of the scary stuff. That was all like here's like some of the fun things that are happening. So here's the deal about AI and automation. Right now, I can go into my enterprise management software and create a digital employee called an AI agent. So agentive AI structure is already in existence right now, deployed within companies, and there is job displacement and ethical AI governance concerns, especially around privacy, data, and how those tools, those large language models, think about what that means. It's a large language model. It's got a bunch of stuff in there. So is it your stuff? And are you okay with your stuff being in there? So those are the types of questions that start to arise with AI. And then again, the job displacement. I think there are some serious conversations we need to have around education and workforce and upskilling and transitioning industries to properly account for what's to come in automation. Blockchain, decentralized finance. Yeah, I mean, regulatory uncertainty is just the name of the game. If I was stuck between the SEC, FINRA, a rock and a hard place, I'd pick none of them because I don't actually want to deal with any of them. And when you start to talk about blockchain, Coinbase, Binance, these huge, massive companies that are seen as investment firms, but they're not, that becomes a seriously confusing and concerning retail investor environment. We see it every day as financial advisors and planners and professionals. When we talk to people, they have questions about crypto, and most of it's centered around, what's the right coin? Is it the one that my friend shared on Facebook that just spun up today and it's worth something? And the answer is going to be, I hope that you plan on going rug shopping later because you're probably going to see one. Now, the third piece, quantum science and computing. Like I said earlier, if we have the ability to break through and threaten current encryption methods, at a scary degree, there is some serious concerns around cybersecurity at the government, institutional, professional, and individual level. If somebody has the ability to crack tons and tons and tons of passwords and technology and things like that very fast, there's probably some conversations that need to be had to make sure that that doesn't get abused. Biotechnology, genomics, all of that sounds really fun when we talk about being able to advance cancer treatment, being able to gene edit and do things, but there's a lot of ethical concern. I even feel strange saying it because that's not my space, but there's ethical concerns, dilemmas there, that if we're not really properly deliberating in open legislative floors, how do we actually arrive at legislation that's considerate of the individual? I don't necessarily think that's happening in that space. And then the last one is advanced energy technologies. Here's a fun fact for you. Texas has benefited significantly from all the AI infrastructure. That's actually the 500 billion, if I'm not mistaken, where that's going. The DoD, there's some massive contract that they got for a supercomputer out in Texas maybe a year ago. I'm sure there's been tons of money going towards economic development going towards Texas related to AI computing. Well, what do I know about Texas's energy grid? All right. What usually comes to people's mind if I ask that question today is that they know that it failed a couple of years ago. And so the question becomes, if we're going to start investing and propping up these data warehouses and storage centers and these big, massive supercomputers on a grid that already is not modernized, how are we going to solve those problems? So again, I think that it's really important we don't get out ahead of our skis. It's very easy to get excited about technology. I do it all the time. But it's really important that we take a realistic approach on how this stuff needs to be deployed because it impacts people, local economies, communities. It impacts things that really need to be considered. So I think that was that's a great question.
That was a great point. And so I guess what other industries should we be watching?
Yeah, I'll take this one. A lot of times we see the headlines, we see the things on the news, and we think that that is 100% of what the reality is, or we see it on the surface. like what Stephen's talking about with AI and technology, the buzzwords, the fin influencers, the YouTube influencers, all that stuff, the things that they talk about most. What oftentimes is missed is the underlying positions or the impact that those types of advancements can have in specific industries or technologies. And a lot of those industries, truthfully, didn't exist 10 years ago. They didn't exist 5 years ago in some instances. And now there's even the creation of new industries in the future. And then also some of these industries could eventually break off into individual sectors. And then we're having sector-based conversations and all that. So for the sleeper sectors that I would focus most on, I have 5 different ones. Fintech and digital assets for what Stephen's talking about, the global shift to digital payment systems, cryptocurrencies, decentralized finance, and blockchain technology is transforming financial services. The rise of digital wallets, peer-to-peer lending, and blockchain application looks like it will continue under this administration. Now, a point to bring up there, it's not the actual, the physical blockchain themselves, like the physical cryptocurrency, but also those exchanges. Stephen mentioned Coinbase as an example. The popularity of those are only going to increase. Think about like how we manage our cash now through banking institutions with Wells Fargo and some of these Bank of America and all these other massive institutions. It's a similar thing that can happen and will happen in the cryptocurrency space. Space commercialization is the second. Advances in satellite technology, private space stations, and extraterrestrial resource extraction are driving investment in orbital logistics, defense, and space-based manufacturing. Quantum computing has a really big impact on this because of the amount of data that can process in a fraction of a second that we didn't used to be able to do previously. A third, augmented reality and spatial computing. The rise of AR powered interfaces and immersive collaboration tools is reshaping EdTech, enterprise operations, customer experiences, and remote work. I mean, our ability to be in multiple places at once today is even different than what it was 10 years ago. When Stephen and I first started practicing, for example, it was all face-to-face meetings. Right now, I am in Florida visiting family, literally in a camper, and I'm having a workshop, I'm having a seminar just like this. That stuff didn't exist. It wasn't the same as what it was 5 years ago or 10 years ago. And that itself, in terms of underlying position, poses as some serious opportunities. Number 4, neurological interfaces and brain-computer interaction. Advancements in neural implants, non-invasive brain mapping, and AI-based assisted cognition could enhance medical treatments and even digital communication. And then number 5, quantum materials and superconductors. Breakthroughs in room temperature superconductors and quantum materials could revolutionize energy transmission, computing, and next-gen electronics. There was an article we were talking about, the Private Wealth Group was talking about a couple of weeks ago, where some scientists, and I wish I could remember where, maybe it was Oxford or Stanford or somewhere, one of those universities has discovered the ability for teleportation, which is wild to think of. You think of Star Trek and some of these other things, but there's articles about teleportation and its existence, the possibility of it. That type of stuff would have been Star Trek language 3 years ago, and now is posing itself as an investment opportunity in the future.
So it is Oxford, and I wanted to say really quick, Arthur, because you mentioned one of the things that you mentioned there was the neurological interfaces, the BCI, the brain computer interactions. So it was Oxford. Oxford also has done some really interesting studies on near-death experiences and consciousness type stuff. And so there are tons of scientific exploration experiences exploration that sounds absolutely crazy when I hear the words, because like it does sound like Star Trek. It does sound like, a sci-fi movie or book. But that is probably how people felt, whenever everybody was sitting on top of their horses and the first Model T drove by. That probably seemed like magic. So I think there's a lot of really cool
it's
things coming out of Oxford.
rapidly shaping the world. It's interesting.
Yeah, very interesting. And I'll just chime one more thing in there is, we've seen a lot of this technological innovation, and we're very much in the middle of the next revolution of technology, and that's this AI revolution. We see and think about the AI, the technology. But like Arthur mentioned, some of those underlying sectors that we like, logistics, like how much more efficient can we, send and receive goods? I think there's some really cool robotics that you've seen all throughout a lot of tech companies. Not only personal robotics, but robotics all throughout distribution centers, which are really intriguing. And you just can't say enough about the energy demand. There obviously a lot of people heard about DeepSeek a couple of weeks ago, and it was a pullback in a lot of those tech focus and AI focused energy and infrastructure and semiconductors. But make no mistake that those technologies, while they exist, still do not even scratch the surface of the AI energy demand that they create. And so it's just a space that we, throughout the VITA Investment Committee, just continue to pour into and really like. And we see those pullbacks and where some people may see as negative as great opportunities for us to further our positions.
Yeah. Guys, this is super exciting stuff, and we can spend hours going down any one of these rabbit holes and learn more and more. But let's try to bring it home and talk about our financial future and tax retirement planning. So what would any of you be able to update us on regulation or policy changes that might impact our taxes or retirement?
Yeah, I'll take this one, and this is a really tough one because we always like to take the stance of we know or we're being informed or we can find a resource. But this has been one of the challenging things. I'll say with this administration, but it's really all administration. You got to remember it's within the first 30 days still, is we really don't know. There's been a lot of talk and a lot of noise about the direction that uh, we feel like they're going to go or we think they're going to go. An example there would be I've seen recently about Social Security, the tax on Social Security, income tax on Social Security for retire age people. Plus, they're talking about removing that as a potential solution, or even removing income tax liability in general, getting rid of income tax. Um, a lot of that shows signals for the potential discussions around what we're going to be doing, but truthfully, nobody really knows yet. We were having a discussion recently that what it seems like with this specific administration is they do a lot of things to test the environment, to test the American people through Twitter and through social media, where some of these things that they might be sending out through like tweets, for example, or on X, excuse me, to use the correct terminology there. Some of these things could be more a testing environment to see what's popular and what's not popular. So if they're getting a lot of responses on removing income tax liability, then maybe that's something that they're going to pursue. Or if it's less responses, actually tracking the data behind their response rates on everything, or their clicks and likes and reposts and shares and all of that stuff, that could determine our tax policy in the future. Is that right or wrong? Yes or no? We don't really know that yet. We're still kind of waiting until we can see a little bit more guidance, which I know is a very difficult answer. Now, there were some things in 2024. One of the biggest ones was with Social Security. The Social Security administration got rid of the windfall provision on some of their income earners, and they retroactively will be paying those checks out from the beginning of 2024 is what's been said. Now there's been no actual movement on it, but that was something that did physically pass in 2024, and we'll have to see the impacts and if that's going to continue to move through into 2025.
And perhaps in what order do you expect the administration to make these types of changes?
Yeah, order's tough too because you have to look at like the timing behind things. The first is with the Tax and Jobs Act, Tax Cuts and Jobs Act, the 2017 law that went into effect in 2018. It does sunset in 2026. So some of these things do have a little bit of a deadline. So the expectation, like Nick was mentioning earlier, is we would probably get some guidance on the Tax Cuts and Jobs Act or reissuing or extending some of those deadlines before 2026 happens. So in terms of order, I think we would see government efficiency is clearly their biggest focus right now. I think after that, we would probably see some Tax and Jobs Acts, some additional things, some additional like extensions or whatever it is. Major tax change policy, I would expect to see before 2027. The reason being is that's that 2-year window. It's the mid-year elections. We'll start to have, I know we have an all red sweep right now, but that might not be the case 2 years from now. So in order for them to pass tax policy that they want, they need to get it done within the next 2 years. So if I were to assign that schedule, that's where I would look at. And it's primarily based on truthfully, the voting schedule for right now.
So Kate, I might throw this one over to you. Since you did such a great job earlier, what do you think the Federal Reserve trends? How will that affect like our personal finances?
You know, in a way, we can dive into how these changes and what steps you can take to navigate them with confidence. Like recent Social Security updates include benefit increases to match inflation, slight match. There's new rules designed to safeguard retirement savings. They're being implemented. There's potential changes to the cap on state and local tax deductions, as Nick had mentioned. And that's particularly important for people in states with high taxes. To secure your financial future, it's essential to maximize your retirement contributions and understand the different retirement plans available to you. Planning for healthcare costs is equally important. Planning for or even utilizing tax efficient strategies to save more money and ensure you have an emergency fund for unexpected expenses. Stay flexible, remain committed, stay the course to your personal financial goals. It's also crucial to stay updated on market trends and seek professional advice, as this can help you remain resilient in a shifting economy. We are all certainly excited to share these updates with you tonight. Some topics may seem complex and could raise questions or concerns, especially as it pertains to your unique situation. I want to just throw out there, please feel free to call or email us to set up some time. We're here to help. It's who we are.
And actually, Corey, could I tack on really quickly? I wanted to
Sure.
highlight something because an observation was made in a client meeting recently. I thought it was really interesting. So anybody that's been in the business of financial advice and planning for the last decade has seen a ton of changes, just as you have as consumers, right? And there have been over the years all types of questions of, do I contribute to Social Security to the maximum that I can? If I'm a self-employed individual and I have the ability to control my salary, there are decisions you have to make around Social Security. When it comes to tax changes, we've seen the RMD age, the required minimum distribution age, which is when the IRS tells you that you have to start taking money out, changed from 70 and a half to 72 to 73, 75. It has changed literally, actually. That wasn't me like just hyperbolically saying numbers. That was the change that we've seen over the last 2 years. We've also seen the stretch IRA get completely eliminated, and now second generation beneficiaries of pre-tax assets have to draw that money down within 10 years. So is the IRS going to be there? Is the Social Security Administration going to be there? I have no clue. They're there right now, though. So from a planning perspective, what we are committing to, just like we always have, is that you're proactive in planning for the ups, the downs, the bad, the ugly. You prepare for the worst, but you plan for the ideal, plan for the best. And so in a very positive perspective, how these changes could affect personal finances and have affected personal finances for the last decade, as we've seen in observing with clients, is that people are making decisions based on the experience. They're based around their ideal. They're planning for, how do I join my money? The world is going crazy. There's headlines every day. Everything is going nuts, but I still have kids I want to put through college, a second place that we want to buy on the lake, and travel that we want to do. And what I've actually seen, and it sounds completely insane and oxymoronic, but what we've seen is people to take more freedom and risks with their money, and And I don't mean that in a bad way. We have clients that have made the determination to retire just because the headlines are crazy. But you know what? They're retired. Every day is Saturday. They're enjoying themselves. They're doing the things they want to do. And it's exactly what they should be doing because the world is going to continue to move, whether you're making decisions for you and your personal finances or not. And so it's just an observation that I was talking to a client about in a recent meeting that, you know, it's actually a little bit liberating. There's a lot of crazy stuff going on. Do what you want to do and what the ideal is. Just don't do anything without really thinking about it.
Awesome. Yeah, guys, we've had a great discussion tonight. I think we covered a lot of topics. I see some questions throughout our discussions that have populated. One that's come up is how do we stay engaged with, or how do I stay engaged with my financial team throughout the year?
I will take that because I know that I say this for every workshop. Just on the shameless plug, visit www.vitafinancial.com. On the website, we have our group emails. We have everything that you can see to contact us, departments and everything. I know a lot of you guys already have our phone numbers. You can email, call, you can do the secure text messages. You can also go to bcapwealth.com for Nicholas Benzer being on this call. He's got a great website, similar resources to ours. So please check out his website. Also, communication strategy for us throughout the year. You will receive text messages about important events. You'll also receive emails on a monthly basis about important topics that you should be aware of. For example, I know you've probably seen the Vita Vital emails that have come through your inbox. Pay attention to those because they'll have hit points that we need to discuss throughout the month. And there's a link to schedule an appointment directly on that. Our quarterly review emails come out through that same function, that same system now. So you can go directly and schedule appointments on our calendar every quarter, just like we've always done. So continuing to get in front of you so we can get in front of the market and get in front of any planning changes that we have.
Great. And just in the interest of time, maybe perhaps we'll take one more. It says, there were a lot of changes mentioned. How will this impact your managing my portfolio?
I could actually lean into that one. And Nick's probably got a different answer, but I want to say for all of us, investing the time, the resources, the blood, sweat, and tears to really understand what's going on, really keep the team, the firm, the company, everybody in it, informed on the different news updates and news wires. I will say that for us, we all have invested pretty heavily into learning more about all the technologies that we've been talking about and applying. So we have it, for instance, the Business Intelligence Group, which is a team of BI analysts that all have their own subject matter expertise. They're an incredible, I call them my crack shot problem solving team because they are just absolutely capable of processing through anything interdisciplinary. And that team's dedicated to building out automation, artificial intelligence tools, building out agents, building out data warehouse and pipelines, and all the things that we're talking about in this conversation. So the real answer is, we're not running away from it. We're leaning into it, learning it, and applying it because that is what is ultimately best for clients in the book of business.
Yeah, I couldn't agree more, Stephen. I like to think we practice what we preach throughout the collective, right? We talked a lot about AI innovation and education, and we're doing the same thing internally over at BCAP as well as Vita Financial, seeing how we can utilize the technology to our advantage instead of being, timid about it. And it's created some great opportunities. It's allowed us to, take the data-driven approach that we've prided ourselves on since I got into the business, almost 7 years ago now, and really make us even more data-driven and have more information at our fingertips, which in turn allows us to be very fluid with our models, which I think ultimately benefits our clients. And at the end of the day, a good mentor of all of ours on this panel really told us probably 3 or 4 years ago, data is the new currency. And I think we've all leaned into that and really ran with it. And so it's really fun to get to work with everybody on a day-by-day basis, and get to exchange ideas and see how we can really create a better product and create better service for each and every one of our clients, and make sure that we're truly doing that fiduciary duty that we pride ourselves on.
Excellent. And well said. Well, guys, I think we can keep this conversation going for hours, but unfortunately, we don't have endless amounts of time. We want to say a huge thank you to all of our panelists for sharing their insights. They were wonderful, very well thought, very detailed. And to our audience for joining us this evening, we really appreciate it. As mentioned, please visit our website, vaidafinancial.com, bcapwealth.com. If you'd like to read more about our 2025 market outlook, check out the January market commentary located both on Vita Financial and BCAP Wealth sites. You can click to visit the Insights page, and you'll see the commentary right at the top. Please stay on for another minute or two if you can. There's going to be a survey that comes out, and you can complete that survey. But in the interest of time, we will say thanks again for joining us this evening, and thanks again to our panelists.
And thank you, Corey,
Thank
for
you,
moderating
Corey.
this
Yes.
fantastic panel. It was incredible. Thank you.
Yeah, thank you
Awesome.
very much.
Thank you, guys.
Awesome.